Welcome to Wall Street to Bay Street, weekly update. Any views expressed here, please, they're for educational purposes. If you would like to follow any of the ideas, consult your own financial advisor. Let's do a quick update. That's the market open prior to August 20th, 2010, and it's option expiration day, so we might get some wacky moves today. Then again, it might be a very quiet day. Let's just go over a bit where the markets are. Let's take a look at the Dow right now, and we'll pull it up right here. Okay, as you can see, since the beginning of July, right about here, we've had a massive rally up, and we've pulled back over the last couple of weeks, or actually last week and a half, as the news in the market has been poor at best. The company earnings have been very strong, but the economic news is looking weaker and weaker. And yesterday we just had a jobless claims number that was minus 500,000, back into that $500,000 range, which is not good. My premise for right now is that this top here might represent the final top for a significant number of months, potentially a couple of years, and we have to be cognizant of that. Let's just take a look here, and you can see here we might actually have a head and shoulders top and neck forming. I know we talked about this, and it was all in the news sort of right here as that neck was forming, and then obviously when everyone's talking about it, it usually doesn't happen. But that being said, that could have just been a fake. And here's the other shoulder right here, two shoulders, there's the head, and if we break down below sort of 9,500, 9,800, 9,400, we should be going down to probably 7,000 or so, just based on that chart pattern. And you've also heard the stories about the Hindenburg omen and that kind of stuff, where you have a record number of daily highs and daily lows at the same time. That's just showing that the market is confused, and sometimes these things will show a significant correction over the next number of months. Let's look at a couple of positions in our portfolio. Okay, the SSO is sort of our market proxy. We're still heavily short that. If we get down to 33 or 32, even below 34, we might start taking off a little piece of that and holding the main portion for an extended move down, as we discussed about the Dow. What we did do is we re-added to the position sort of up here, took half off, so the second portion we added is risk-free going forward. Gold, we have a very small position in the portfolio. When we're coming down here, I was looking for an 1140 target or thereabouts. Sort of missed the move. So any pullbacks we get here, if you want, you can start scaling in at 1200 and 1180 or even 1210. Take, say, a quarter at 1210, quarter at 1200, and your full position 1180. Gold is looking strong here, and I would anticipate that we will get significant moves forward in the future. Now we have a small option position in FAS from July, and it expires today, so we'll be looking at closing out that position for a small gain. And you can see that the financials are starting to end weak with this weakness over the last week and a half. I know we've talked about Monsanto. It's not a position in the portfolio yet. We're looking at the daily linear regression channels here, and it's coming down. If we can sort of get below 55, in the 50 range, somewhere in there, if we can break below here, maybe get a 50% pullback, Fibonacci pullback from the point here to point here, somewhere in here. We can put the fibs on here if we want. Let's see exactly where it is. It might be a good place for entry. Let's try that again. And we just want to see roughly where the place is, and we can expand this up a bit. So the 50% retracement takes you down to 53.66, or in that range. So once we get to that area, we'll start looking for entry signals to try to put in a lower risk entry for our position. A couple other portfolio positions. We purchased Cisco right down here as it was hitting the second standard deviation, probably the second day. We've taken off half the position as it pulls, and I think we still have our current initial stop on there, but we might move the stop to entry. And if we get any more market weakness, we might just scale out of this position, or just enter it entirely, and look to potentially re-enter if we get a lower low. Another significant position where we've taken off 3/4 of the position is CAGC, China Agritech, where we have we purchased in here somewhere in the 13s, I believe, and we've been riding this wave. Now, obviously, everyone has seen the news about the BHP Billiton hostile bid for potash. China Agritech is in the same business in China. Now, we sold off 3/4 of a position. It was a smaller portfolio position. Too bad it wasn't larger. And we will just hold this for an extended move. Now, we'll be watching this trend line, and if we start breaking below sort of anywhere outside of this trend line, we'll look at exiting that position. But for now, we're going to try holding it as long as we can. Another position that's sort of bumping along right now is China Automotive. This is sort of a play on China's automobile market. We got in here. It rose a little bit. It's pulled back a little bit. It's got significant support at this level. Our stop is, I think, 1550, somewhere down here. If it breaks that level, it could drop below. So. And we won't be looking to re-enter that until it rebottoms. But at this point, we'll see how this position turns out. I believe it's sort of a proxy on the Chinese market. If the Chinese market goes down, then we're all in serious trouble. And that's sort of the update on Wall Street to Bay Street. We'll be looking the next 2 weeks. Last 2 weeks of August are typically the quietest in the market. So volume is very low, but we'll be looking to add some positions over the next couple of weeks. They won't be very large, but we'll be looking to be much more active come September as everyone comes back from their August vacations. Good luck, good trading, and hope it helps. Thanks.